Are you ready to become your own bank and take control of your financial future? Today, we'll talk about 7 different self-directed accounts. Well, one is not really self-directed, but it's a new Trump account, which we just added to the list to give you some idea what you could do to help you build up your own banks. Hi, this is your host, Jane. Welcome back to another episode of Tax-Exempt Millionaire Club. If you haven't joined our community, scan the QR code. We have a school community, SKOOL. At the time I record this, we have over 200 members in our community. We are helping each other to establish our own banking system, the BO.W method we're talking about, bank, ownership, leverage, and discipline, to really fast forward our wealth accumulation into tax-exempt multi-millions. Today, we will talk about different self-directed accounts. I did a series of self-directed solo 401k, which is my personal favorite. But today, let's compare different self-directed accounts available for us. We added the new Trump account, which you could start setting it up in 2025. Let me share you the comparison chart so it will be much easier to explain. Let's take a look one by one. Traditional IRA, Roth IRA, there's a contribution limit for 2025, $7,000, or there's additional $1,000 catch up if you're over age. Traditional IRA is tax deductible. For traditional IRA, it's tax-free dollar in. Every single dollar will be taxable when you start withdrawing. Roth IRA is the opposite. After tax dollar in, gross is tax deferred and then withdrawal is tax-free. Roth IRA has income limits, which means after certain income, you will be phased out. You will not be able to contribute. The solution for that is so-called the backdoor Roth, which we will not go into detail in this episode. There's no RMD required minimum distribution for Roth IRA, but there will be for traditional IRA. RMD means after a certain age. As of now, the RMD age was changed to 73 years old. SEP IRA, which is set up for small business owners, up to 25% of the compensation. Maximum amount is $70,000. No catch up. It's a high limit for small business owners, and then it can be tax deductible. Right? Simple IRA, the limit is $16,500. There's different catch up for different age amount. If you are in this 60 to 63 age group, you can contribute $16,500 plus $3,500 plus the $2,175. The 60 to 63 years old, for this age group, IRS gives you additional catch-up on top of the regular catch-up. This is usually used for small business as well. It is required to have the employer match as well. Solo 401k, we did intensive videos on this one. I will not repeat this contribution limit. But remember, you have to be eligible to contribute to solo 401k, which not every single small business owner will be eligible. HSA and FSA account, there is a contribution limit. For this one, we call it triple tax advantage, which is triple tax free. The contribution dollar amount is tax free. It's pre-tax dollar to go into the account. The gross is tax deferred and tax free if you use it for medical. Remember, because the feature of this FSA or HSA account, the actual expenses have to obey IRS rules for eligible expenses. It has to be used for medical related expenses. There's a whole 9 yards about which will be eligible and which will not. We'll not go into detail of that. Always reference to the IRS related schedules or forms. Covered IRA, which is also called CESA, is used for educational purposes. It's tax-free if eventually you use the money for educational expenses. It's only $2,000 per year per kid, no catch-up. You can self-direct Coverdell ESA, but since the contribution is so low, I don't think this one is widely used. You need the runway to continuously funding the $2,000 per kid. For the new Trump account, you can fund up to $5,000 per year per kid, and it has some restricted access until the kid is 18 years old. Also, in addition, this new Trump bill, the BBB, also gives any newborns between 2025 to 2028 a $1,000 seed money. There's no catch up for this one. This one is not for self-direct. Since this account is so new, I don't even know if those custodian companies will allow you to self-direct this kind of. Okay, this is the snapshot of all the self-directed or some new account. We want to put it together, give you an overview of what you could do to utilize those self-direct accounts to build up your own. The main purpose to establish those accounts is to take the money out, make an alternative investment, and then push the money into those accounts, which you have to legally anyway. Let your self-directed bank grow as a snowball. Okay, that's all we prepared for you for all the self-directed accounts as well as some new Trump accounts to give you the snapshot about what's available, what you could self-direct. As we mentioned, different accounts will have different features or restrictions. There's a catch-up. If you meet the age standard and if you want to contribute more, feel free to do so and take advantage of that. Remember, you should never over-contribute. If you do, you have to call the custodian you made the contribution to recharacterize and make the documentation to show you overfunded. Now you are doing the recharacterization. So which self-directed are you using? Comment below. If this video is helpful for you, feel free to like, subscribe, and comment so you will not miss the next episode. As we always say, don't let banks, taxes, or outdated advice limit your growth. Join our TMC Tax-Exempt Millionaire Club today. Own your bank, your wealth, your future, all tax-exempt. I'll see you in the next episode. Bye.